Hello my fellow investors, and welcome back to another earnings report video as well as stock analysis as well. And guys, it should be Saturday as if I'm putting this video out, and we're going to take a look at Amazon. Yeah, they had earnings on the 2nd, so I know it's been a couple days, but if you guys saw my Apple video, you guys probably know that I am not at home right now and I cannot record these videos as they come out. Therefore, I'm pre-recording them. So yeah, nonetheless though, we can still take a look at Amazon earnings and see if the current share price, this is looking like a buy. Now obviously, depending on what Friday looks like, I don't know if Amazon will go up or down, but nonetheless, we can make a pretty good assessment as to what price we should buy this company at. So with that said, let's get started with this analysis. So now let's jump into Seeking Alpha's earnings summary. We got over here EPS normalized estimate came in at 17 cents, EPS gap estimate 16 cents, revenue of $145.78 billion. And by the looks of it, Amazon did a non-GAAP EPS of 3 cents, which missed by 14 cents. Revenue, however, beats by $149.2 billion, which was around $3.43 billion. So now let's come into their actual earnings report, and like always guys, this will be linked in the description below. We got over here, fourth quarter 2022, net sales increased 9% to $149.2 billion in the fourth quarter, compared with $137.4 billion in the fourth quarter 2021. Okay, so that was an increase, really nice. Operating income decreased to $2.7 billion in the fourth quarter, compared with $3.5 billion in the fourth quarter 2022. Net income, however, also decreased to $0.3 billion in the fourth quarter, or 3 cents per diluted share, compared to $14.3 billion or $1.39 per diluted share in the fourth quarter. That is a massive decrease. These guys just went from $14.3 billion to $0.3 billion. They just lost $14 billion in 1 year. That's absolutely insane. When it comes to the full year, in the net sales, they went up by the same margin, 9%. Operating income decreased to $12.2 billion in 2022 compared to $24.9 billion. That's insane as well. Oh my God. $25 billion in 2021 to $12.2 billion in 2022. That's absolutely massive. When it comes to the operating cash flow, this increased by 1% to $46.8 billion for the trailing 12 months compared to $46.3 billion for the trailing 12 months ending in December 31st, 2021. Free cash flow decreased to an outflow, which is, I mean, we've seen the fact that they have been doing this. It's unfortunately, but yeah, outflow free cash flow, meaning that they're in the negatives. They're in the negatives to $11.6 billion for the trailing 12 months compared to the outflow of $9.1 billion in the trailing 12 months of December 31st, 2021. So they were in the negative free cash flow back in 2021, and they just went further into this negative free cash flow. That's really bad to see. Taking a look at what the CEO had to say about this, we got, quote, "Our relentless focus on providing the broadest selection, exceptional value, and vast delivery drove customer demand on our store business during the fourth quarter that exceeded our expectations, and we're appreciative of all our customers who turned to Amazon this past holiday season," said Andy Jassy, Amazon CEO. "We're also encouraged by the continued progress we're taking in reducing our cost to serve in the operations part of the stores business. In the short term, we face an uncertain economy, but we remain quite optimistic about the long-term opportunities for Amazon. The vast majority of total market segment share on both global retail and IT still reside in physical stores and on-premise data centers. And as this equation steadily flips, we believe our leading customer experience in these areas, along with the results of our continued hard work and invention to improve every day, will lead to significant growth in the coming years. When you also factor in our investments and innovation in several other broad customer experiences, for example, streaming entertainment, which is like Twitch, customer first healthcare, broadband satellite connectivity for more communities globally, there's additional reasons to feel optimistic about the future, about what the future holds." So what I want to talk about mainly when it comes to this is actually their outlook. If we come over here, we can see the first quarter 2023 guidance. Net sales expected to be between $121 billion to $126 billion, or to grow between 4 to 8% compared with the first quarter 2022. This guidance anticipates an unfavorable impact of approximately 210 basis points from the foreign exchange rates. Now this right here is the funny one. Operating income is expected to be between $0 to $4 billion. okay, sure. I guess that's one way to put it. We don't know where it's going to be, but it's like between 0 and 4 billion. Well, it's somewhere in between there. It has to be, right? Compared with the $3.7 billion in the first quarter of 2022. So now let's come into the calculator. We got the ticker symbol for AMZN, market cap of $1.2 trillion and a PE of 104.2. Absolutely crazy, with the current share price of $113. Now looking at the share price, guys, this is just absolutely crazy. With the past 2 days, they have just skyrocketed. I'm gonna show you guys the 5-day chart on this. This is absolutely crazy. But on the 1 year, they're still down 25.03%. Year to date, they're up 31.6%. Let's actually take a look at this in the 5-day. Look at that jump right there. Guess when Jerome Powell had his talk? I'll give you one guess. If you say right there, yeah, that's pretty much where it was, guys. I mean, to be fair, they were rising prior to that, but just a few weeks ago, guys, they were at $81.43. If y'all remember that, this wasn't that long ago on this 52-week range, and their highest was $170.83. And so far today on the intraday, as if I'm recording this, it's still the second, but on the intraday, they were up 7.34%. Everything just skyrocketed, like everything, like just with AMD rising yesterday 12%, and Meta gaining 20% in like 5 minutes, not even a day, 5 minutes. It was crazy. So far though, post market after earnings, you can see that they are down 4.66%. Still though, a net positive overall of around 3%. They do not pay out the dividend, which means that all of this cash flow is going straight into themselves. However, take a look at this last year's free cash flow. It is in the negatives, as we saw in the earnings report. They are outflow when it comes to their cash flow. So now looking at some fundamentals, we got the net income 5 years ago of $10.1 billion to 1 year ago of $11.3 billion. You know, you gotta give them credit. They are still up 12%. However, look at this rise. Pretty consistent rise from 5 to 2 years ago. And then from 2 to 1 year ago, they just crashed hard. Going from $33.4 billion to $11.3 billion, guys. That's not a tiny amount. That's not a tiny amount at all. I'm giving this a 40%. Mainly because they are still up, I guess, on the, on the 5 year. And on top of that, they have been going up in the past, 5 to 2 years ago. But overall, this is not a good metric. And it gets even worse when we take a look at the free cash flow. We saw it go negative, and well, here it is. 5 years ago of $17.3 billion to 1 year ago of negative $27.3 billion. Thank God that they did not pay out the dividend. Oh dear Lord. That is a decrease of 252% on the 5 year. However, though, their average is still in the positive by $4.76 billion. But I mean, that's mainly attributed to like these past 3 years. Aside from that, this is looking awful. So overall, I'm giving this guys a 5%. Looking now at the revenue, this one's actually looking really good. We got 5 years ago of $232.9 billion to 1 year ago of $502.2 billion. That's an increase of 115%. Really nice consistent increase. So I'm giving this not 1000%, my bad on that one, a 100% overall. Looking now at the assets minus liabilities, this one is also looking really good, consistently increasing from 5 to 2 years ago. Small decrease from 2 to 1 year ago, but it was only by $1 billion or so. And now coming into the assets minus the total liabilities, this one's actually looking really good, consistently increasing from 5 to 2 years ago, and only a small dip from 2 to 1 year ago, as you guys can clearly see, going down by $1 billion or so. Average total assets, it is $364.7 billion. Average liabilities is $251 billion. And during this difference, we get $113.74 billion. I'm giving this a 90%. Looking at the cash flow minus the liabilities, I mean, outflow in cash flow. There's nothing more to say. The lowest year was 1 year ago, and they have been continuously decreasing this. Guys, I'm giving this a 0%. I mean, there's just nothing more to say on here. When it comes to the shares outstanding, this one is actually fairly surprising because Well, they are issuing shares, but not a lot. That doesn't even get to 5%, going from 9.8 billion shares to 10.2 billion shares, increase of 3.85% on the 5-year and almost a 1/5% from the previous year to the current year. And what's sad about this is that they've been consistently issuing shares. Not a single year did they decide to like buy back or keep it the same. No, they've been issuing every single year. So for that reason, I'm giving this a 35%. When it comes to the cash equivalents, they currently hold almost $35 billion, an average of $33.61 billion. And now when it comes to the overall grade and their fundamentals, we gave them an income of 40%, free cash flow 5%, revenue 100%, assets minus liabilities 90%, cash flow minus liabilities 0%, and the shares outstanding of 35% for an overall grade of 44%. Guys, they have problems. Amazon has problems. Free cash flow is in the negatives, really bad. Net income went down as of 1 year ago, really bad. And because their cash flow is in the negatives, their cash flow minus liabilities is continuously decreasing, really bad. So overall grade of 44, yeah, I think that's very well given. But is buying this company at almost $113, is it a buy? Well, unfortunately, I have done Amazon before. Actually, I think it has been a while since I have done Amazon. Honestly, I don't think it's been that recently. So I guess it's still really good for me to do it now. Let's assume revenue growth assumption of 12, 13, and 14% for the low, medium, and high. I am getting this revenue from Seeking Alpha's revenue growth forward at 13.15%. So, me saying 12, 13, and 14 takes the lowest at what they're expecting and the highest by 1% of 14%. And then for the predicted share buyback, we have been seeing that they've been continuously giving out shares, like issuing shares. So I'm going to say that they're going to do this at a much higher rate for the low assumption at 5%. For the median, let's say 4%, and for the high assumption, I say that they'll do roughly the same that they have been doing in the past 5 years of around 3%. With a required rate of return of 10%, guys, this puts me between the ranges of $43.65 to $47.52. Adjusting for debt, this does come down, not a lot, but it does come down nonetheless to $37.05 all the way up to $40.79 with a margin of safety of 5, 10, 15%. This is between $31.50 to $38.75. Now, to those people who say, but the rally happened. Guys, that rally was uncalled for. There was no reason for that to happen. Like, hopefully this is not the case, but if we are back in this euphoric market of 2021 where stocks only go up, and now apparently I'm hearing that there's short squeezes happening now for companies like Carvana too, I'm like, bro, this cannot be happening again. It really cannot. Not in this kind of environment with the Fed raising interest rates up to 5%. They're saying they're going to keep increasing interest rates, and yet the market's just like, nah, we don't believe it. We don't care. We're not going to believe you. This really is uncalled for. So I personally, okay, great. We saw a rise. If you guys made some money on it, great. Awesome. Guess what? At the end of the day, these values I'm getting isn't telling you what the company is going to. It's telling you what the company should be worth. And unfortunately, this company is not worth $113. It just isn't. They have negative cash flow. In the past 2 years, they did negative cash flow and they went deeper into negative cash flow. So, unfortunate to say, but I don't care if the share price goes up. If you guys make money on it, day trading it, sure, by all means, maybe you guys can comment on my friend's videos since he mainly does technical analysis, and you guys can ask him what caused this massive rise. But from a fundamental perspective, that didn't make sense at all, period. It was just uncalled for. So, okay, sure, it went up. Hopefully you guys made money on that. Congratulations. At the end of the day, though, it's still uncalled for, and I'm still saying that this company is overpriced. And until it falls down to around like $50 or so, I'm going to keep calling it overpriced unless their fundamentals get better. All in all, when it comes to Amazon, very, very surprising. You would think that Amazon's like the juggernaut, can't be stopped. It's actually not that strong of a company. It really isn't. At least when it comes to those fundamentals, their castles are awful. Honestly, really, really bad. So unless they fix it, this is my target share prices, or they have to fall for me to actually fall in love with this. So even at the 52-week lows that they were at, still not that attractive for me. That pretty much is it for this video. But if you like, comment, subscribe. It really does help with the algorithm on YouTube. You guys can follow us on the new tech sites. Link in the description below. So with that said, peace out. I will see you all in the next stock analysis video as well as earnings report.